on.
Mic check. Can you guys hear me?
Yes.
Okay, cool. All right, cool. Let me just make sure that we don't have a repeat of yesterday. So this will go. I will just have. Also, I noticed when I was editing the recording, it looked like this part was in a part of the screen and not the entire thing. So I switched PCs today just to see if it's the size of that PC over there or something. So we will see. All right, so let's jump in and start with higher time frame analysis, which is what the good book says. So yesterday we talked about my expectations for today, really. My higher time frame tools point to Wednesday, March 12 being the start of a new daily cycle. And my expectation is that this is going to be a choppy cycle. Choppy, but leaning more to buy side because we have a lot of untapped liquidity above us. Plus, we have the last range that we left above us. So for all intents and purposes, I believe this should likely draw higher. Standard analysis would say you look at the start of the cycle and you look left for untapped liquidity pools. That would automatically point to that right there in the first level of buy side liquidity. Today is Wednesday. So going into the rest of the week and into next week, my expectation is that 21-21 should be the draw. I don't know what it's going to look like, but wick or close here is irrelevant for me. I want to see draw there, and then that delivery will suggest if I should look for a higher price or just continue to play this delivery. So far, since the start of this delivery, there has been no one-sided price action that's still open. It went up, filled, went higher, filled. This is now efficient. Very, very efficient, which means a breakaway gap on the daily chart is to be expected. That analysis is pointing to the potential that the choppy run higher is going to get really far above this. But we haven't seen any confirmations yet. But this structure suggests that once you have an efficient range, premium to discount for chops, okay? Oh, I can't use that. I have to use this. If I do that, I'm gonna start a movement. So I'm going to pull this here for reference, right? So for reference, simplicity, since the start of this daily cycle, this is the range. We are very efficient. There's no imbalances unless you're going to get micro and talk about other time frames or slight discrepancies. Big picture is there are no imbalances here, okay? So the expectation is we should close above here. FEG stays open, then it runs higher because this cycle is going to last a couple of weeks. I'm looking for that to take place next week. So since I'm here, next week, 23rd, 1, 2, wait, what? This is the first Friday in March, second Friday. Okay, so the week of the 16th to the 22nd, options expiry, I don't want to see that week get animated. But next week has high impact news. So I'm looking for some aggressive delivery next week. So for this week, it's just staying in line with the analysis, looking to see if the expectations and the technicals align. But if you want what I'm looking for the next couple of weeks, it's this range to get closed above FEG here or down candle here, and then they send this up into one of these daily highs. Okay, that's the first thing. So that's big picture, right? And now we can go into the lower time frames. Bam. So as usual, we don't need the new submission range. We need this part. This is here because I started a little thing to kind of help the guys on Patreon journal. So every day I post the trade of the day using this. Since my day ended pretty early, I did that early. But pretty much gonna do the same thing. So coming into the day, my bias was bullish. Okay. Since from the call yesterday, I mentioned that and I was going to be bullish for today. I'd expect bullishness. So going into the day, it's pretty much the same thing. You grab 7 o'clock, principled, or 8 o'clock if you are like me. Really doesn't matter. What matters is the levels here. So if we start trading at 7 and you're bullish, what you'd see is submission range high is above you, submission range EQ is below you, submission range low is miles away. Okay. With the absence of high impact news in the morning, after the market has been trading down like that, unless
I'm not feeling it. Well, I am.
I vote no. Same.
Unless yesterday was the end of the delivery, I wouldn't expect another run lower. So here you're thinking submission range EQ, higher prices. Higher prices is going to mean whatever time we get to this EQ here, in this case, you look left and you find the high that was made or the highest point before that. You could use failure swings in here to frame your drawn liquidity. But for analysis purposes, you're thinking once we trade through, once we leave this area, we should be trying to make a new high because that's what a bullish delivery looks like. Premium, discount, then it runs, okay? So for all intents and purposes, key level is already created for you. You're in the market at the time of the day when you want to be trading. So now it's just waiting for a blend of the two. Doing a little bit more analysis, right? Here's your key level. There's already been a delivery at your key level. So I'm gonna tag the open price of this candle at 4:20 a.m. Somebody's going to wonder why I'm tagging that. I'm going to say I've showed you that process a million times. So this is something that I mentioned briefly yesterday, and I'll mention it again. If you have a level, okay, like this one right here, the delivery at the level creates the trade setup. Most persons are going to have the level, have the delivery here, and they still fumble the entry here for some reason, okay? I don't think that's a sustainable practice. If you have a level, trading the level mechanically, that for me is a no-no. Waiting to see what happens at the level, and that for me is a yes, yes. So, just going back a little. This EQ point was created all the way over here. I don't analyze starting at midnight, so I'm not going to point out whether it was traded to at midnight or not. That's irrelevant. We can see the market traded down into it after going higher here. Left to right, we could read the delivery. Failed expansion, order block candidate. Failed expansion, order block candidate. When this high gets taken, you're buying a retracement. one of these retracement. I'm going to tell you which one. If you approach it like that, once we trade through here, I'm buying a retracement. Buy a retracement. That's your order block. Notice how this candle right here, let's just put a red line on it again. There. Overlaps with this delivery at EQ. So you have multiple key levels printing in an area where you expect something bullish to print, or if it's bearish, displacement lower. This is not displacement lower. We're getting retracements, new high. Let's clear out this high. Retracing higher lows, order block, proportion candle, all the good things. Failed expansion, close below, order block. This here becomes the same thing again. Failed expansion, just like this. We close through this low, just like this. We're buying retracements after this high gets taken. So in this fractal, you're buying a retracement after this high gets taken. Now, unless you're getting in here, there is no entry. But you can look at all of this and then see what you want. Order block, and that's your expansion higher. So the good book says, starting with my expansion, that's my breakaway gap. There. This is the FEG I want them to see them retrace to. This is the one I don't want to see them close below. Okay. Entering here, perfectly fine. Your stop is going to go below here. This has clean bodies. So if you're entering here, let's say you're framing a trade like this, order block like that. Let's just say, right? Since it did not retrace after taking this, so you're expecting a retracement. Let's say you're framing a trade here. Most persons would want to just chuck their stop exactly at the low like that. That don't make any sense for me in this case, since it's like this. I'd want to put my stop below it. So depending on your risk appetite, you could put 10 points below, smooth lows, 20 points below. I can't tell you what to do there, but just don't chug your stop at lows like this. It doesn't matter if it played out here or not. It's not a good practice. What's sustainable here is understanding what you want to see here to make a new high, and then you wait. Time of the day comes in, all that good stuff. There's a trade. Pretty simple, as expected. M1 probably is going to be nicer than that. Again, we have key levels. Trading down into the key level, fail expansion. I went long here. So if you saw the long setup I posted this morning, I went long here. No fear. The moment this did not close below here, I just bought. And then that's it. And then pretty easy. The only thing I didn't mention is I got a short in here, like a sell to buy, just pretty nice too. Using same rules. Equity is open at 8:30. If we are above where I want to buy, I want to sell above the open of 8:32. 8:32 trades up. Ideally, I wanted a high. As it was trading up, I sold into that, expecting them to be a shallow run because it already ran higher. If this was a small candle and sweeping that high and then going low would be nice. But they already ran up in that candle. So I'm expecting just a wick and then move fast. And then that's what happened. So sell to buy. So pretty standard, same rules, no tricks. The only thing I didn't mention here is I had something else on my charts today. I think I shared that the level I was looking for was 19,701. Pretty much here. I don't remember that was the high of the morning and it ran through it in the PM session. So this level is this was my target for the day. And yeah, that was hit. So pretty much it for the analysis, unless you have any questions. Straightforward review. Bias given, key levels clear, entry fractal clear. I mentioned this morning I want to see a convincing sell side run. I don't know how clear that was, but let me just point to something here. Most times you have a big push, then a retracement, and most persons are buying here and then it's gone. Easy. Sometimes, like in this case here, this expansion here, which is here, does not come back here. So it looks like this. Pretty much time distortion, then it comes back and then it runs. So both of these are the same thing, it just takes longer. So if you could wipe off here to here, it would still be from this run to this low. That's all I'm seeing here. An expansion from discount, failing to get back down into here. All these are lows. All these are lows. Nothing meaningful taking place here. So when I mentioned I want to see a more convincing sell side run, something that I can trust as an order block. And then that's what it looked like. So yeah, pretty straightforward. Any questions? A table to the no. Pretty straightforward for everybody. Okay. I guess that's it for the review today. Thank you for coming out. Nice and very clean. All right, cool. Yeah, I agree. Nothing here is like beyond what we talked about. Pretty straightforward. So see you tomorrow. Go enjoy the rest of your day.
Thank you, Kish.
Cool.